I'm Owen Bigland. This is the Inside Edge video blog. Okay, a couple topics today. I'm going to talk about interest rates and the interest rate hikes that are upon us now. They're going to start any day now. Might even have already started by the time I publish this video. And I'm also going to just brush on some comments here from the banking regulator in Ottawa, Peter Routledge, and just kind of comment on a couple of comments he just recently made on Bloomberg. So, interest rate hikes. As you guys know, as I do this video blog right now, the Bank of Canada decided to hold rates steady last month. We were expecting a 25 basis point hike. I guess, you know, we're still under COVID lockdown here. Canada is still got a lot of restrictions compared to a lot of countries right now. Thought, hey, maybe let's just hold off here another month or so. But for sure, these rate hikes are coming. Sounds like 25 basis point, although I'm hearing rumblings the first one might be 50 basis points. Now, a 25 basis point hike, or maybe even two, probably isn't going to do a whole lot to this ultra white hot market that I've been talking about here for a while. 30-year low in inventory, nothing for sale. Right now, we've got under 5,000 homes listed in the Greater Vancouver Real Estate Board. We usually have closer to 12,000, and a whole lot of buyers. And let's face it, ultra low interest rates. So it's a tinderbox here that's on fire right now. So a couple of 25-point basis hikes aren't going to do much, but if we get 4 or 5 of these in 2022, then absolutely. That might take that variable rate from 1.3 to 2.3. And that will affect especially the higher price categories. The detached market, where you're buying a detached Vancouver special on the east side for $2 million or something on the west side for $4.5 million. That will have an impact on those homes, and it will definitely trickle down to the condo market as well. You know, this has been going on for quite a while, and in the States as well, about, interest rate hikes. And, you saw that big sell-off in the NASDAQ and the S&P 500 in January because of the interest rate hikes, even though a lot of that was already baked in, and it was probably an over-exaggeration, and it was oversold, which is usually what markets do. But, I have to tell people, if a 25 or a 50 or a 75 or even a full 1% interest rate hike, for some Canadians, they're saying that's going to take them to the poorhouse and they're not going to be able to make their mortgage payments. Now, I don't know any of these people. They're not my clients. I take it they're out there. But gee, if you're thinking about buying a home or getting into your first home here this year or next year, if you're worried about a 1% interest rate hike or even a 1.5% interest rate, if that's going to put you into serious financial trouble, then you should not be buying a house. I mean, it's crazy. You should be expecting these. And the other thing I tell people, make no bones about it. We are in a historic low interest rate environment, and we are going to be for a long time to come. I always tell you guys the story. When I first started in real estate, I was paying 16, 17% on my mortgages. I still remember it wasn't that long ago when interest rates dipped into single digits, 9%, and I thought I had died and gone to heaven. We're going to have low interest rates for some time to come, but I often question some of the stuff I see in the media where they talk about a 50 basis point hike and how that's going to cause serious damage to the housing market and people's mortgages. Well, I'm sure there's some of those people out there that have overextended themselves somehow with B and C grade lenders and probably had no business buying a house, because once you're qualified and you're on a variable rate for 1.2 or 1.3, you should recognize that there's nowhere to go but up from here. Second thing, interview with this Peter Routledge, the banking regulator. He had some interesting comments here. He was talking about, interest rate hikes, and how once the interest rate hikes get into full gear, he could see a 10 to 20% drop in the housing market. Yeah, for sure, that could happen. It's always like these guys that say, hey, in the next 6 months, with interest rates and the COVID and the Fed and tightening and stimulus going away, the S&P 500 could drop 10 or 15%. Well, yeah, no kidding. Of course it can. That's like saying we're going to get rain this spring in Vancouver. Anything can happen, absolutely. We get a variable rate moves from 1.4 to 2.6 or something over the next 18 months. Yeah, prices are probably going to go down 10 or 15%. But what I always tell people is, buying a home, buying your principal residence isn't about what's going to happen next year or the year after that. But here's where it gets a little funny here. He talked about how in the Canadian housing market right now, there's a speculative fever out there right now. And, here's what I would say to that. And remember, I don't think Mr. Routledge is anything like little Evan Sindall. You know how I feel about him. This guy's a pretty smart guy. But the bottom line, he is a little bit like Evan Sindall in a way. He's in Ottawa there, sitting at his computer terminal. He gets this Canadian housing data. And, he's not boots on the ground here in Vancouver selling homes like I am, or in a brokerage where I work out of Macdonald, Westmar, that we did $3 billion last year in sales. So I'm privy to thousands and thousands of deals, both directly through me and through my brokerage. So I have a pretty good bead, a really good bead on who is buying homes, who the buyers are, who the sellers are. Are they buying them as principal residents, or are they speculators, or are they investors? Big difference. So from the front lines, from what I see, there is not, it might have an appearance of a speculative fever, but I can tell you firsthand, there's speculators and flippers are not in this market. The majority of this market is principal residence buyers. I see it day in and day out on my listings that I'm getting offers on. They're principal residence buyers and first-time buyers. And the speculative fever you're seeing is because of the lack of supply. It's a couple of things. It's low interest rates, which are going to continue to be low for some time to come, even when they do go up, a full 4 or 5 25-point basis hikes. They're still going to be well below our historic average for interest rates, which runs around 6.5%. It's no supply. We're at a 30-year low, and I think Toronto, I believe, is pretty close to us too. As a matter of fact, all of the United States right now is facing huge supply shortages. It's also, what I talked about here last couple of weeks ago, it's the people that have been outbid on multiple properties. The FOMO kicks in because they ask themselves, when is the next property like this, a good property, going to hit? It could be a couple of weeks, it could be a few months. Meanwhile, the market is, especially the condo market, strata market, is trending up, and it's had a huge jolt up here the last 75 days. And it's probably trending up 1.5%, 2% a month right now. As I speak, it'll change, but for right now, that $700,000 condo next month is going to be $710,000 or $715,000. So there's that, the speculative fever is, I need to get into the housing market. I got to get out of this renting treadmill. I'm pre-approved. I'm going to put all my chips in. I've already lost out on 2 or 3 others. It comes back to lack of supply, and this is typical of Ottawa. They never want to talk about the white elephant that's out there, that they can't build any homes, and working with the provinces or working with the city of Vancouver, who stifles development and building new homes at every corner. I've done so many blogs on it. $200,000 per 2-bedroom unit goes to the city of Vancouver in fees and permits and bureaucracy that they waste away. But they don't talk about that. So I think this guy's a pretty smart guy, but what I would say is, it sure might seem like speculative fever, but I can tell you from the front lines, this is first-time buyers trying to get into the market. And there's so little supply out there. The other thing he went on to say here, he says, talks about investors, and he said, for the most part, a lot of investors with the current prices have gone on to the sidelines. Yeah. I mean, I think if you've got an indiscretionary purchase, it's not mandatory like buying a principal residence. Some investors have, for sure. But he went on to say, they're probably moved on. Investors have probably moved on and looking at other more attractive outlets. Well, gee, I don't know. What's these more attractive outlets? Buying marijuana stocks? I mean, as I speak right now, we had a pullback in January, but the S&P 500 is back up at my portfolio is back up at near all-time highs again. Most of the companies I own and ETFs are at 52-week highs. Pretty much all my Canadian holdings as I speak, Canadian banks, the telcos, are all at or near 52-week highs. If anything, the stock market right now, it might be hotter than the housing market, if you can call that. I mean, it's trading at all-time highs. So, the investors, this is where it comes back to the difference between investors and speculators. I'm still selling a lot of homes to investors. It's a tough go, though. But if you can get the right unit at the right price, my buyers are going to buy these condos. They're going to put 20% down, borrow the other 80%, take advantage of the leverage. They're going to borrow and lock it in at a 1.4 variable rate right now, and they know that that will go up a little bit over time for sure. But we're still going to be in a low interest rate environment. And they're going to keep it for 15, 20, 25 years and let the tenant do all the heavy lifting, paying down the mortgage. So he kind of contradicts himself here a little bit. I just think that I don't see, it might seem like speculative fever, but trust me, we're not getting flipper. I've talked to you about this many times before. It's a myth. People flipping homes. It doesn't work in BC or in Vancouver, and it hasn't for a long time because of the friction costs. The PTT on the way in, GST potentially, the commissions to sell. You need, if you buy a typical one-bedroom condo, you need that condo to go up $50,000 just to sell it next year to break even with those friction costs. So it's principal residence buyers that are doing the majority of the buying, or if they're investors, they are investors. They're not speculators. And part of it, again, why you're getting this speculative fever that's out there is because there's nothing for sale. Market is trending up, interest rates are low, people have had their head handed to them multiple times and lost out, so they start putting all their chips in. And if they've got the right holding period, they're doing the right thing, in my opinion. It's certainly going to beat renting and staying on that rental treadmill, because that's a disaster. That is going to devastate you financially. How many blogs have I done about that, or I talk about it in my book? Once you're in the housing market and you can keep it, you're going to do fantastic. But in the short term, yeah, we could have a 10 or 20% correction like he's saying here. Maybe, maybe not. But who cares? You're buying your principal residence here, or you're an investor. You're going to buy it and keep it. And it'll work out fine for you. I'm Owen Bigland. As always, thanks for watching. Thanks to all my new subscribers. I'll see you next week.